one really big thing that we're seeing when I'm speaking to agents everywhere is that the city had a relatively positive summer. Chicago's gotten kind of a bad rap in recent years, but we had a very successful NASCAR event, we had the Democratic National Convention, we had Lollapalooza, and those all went off kind of seamlessly. And so a lot of the agents are saying people are starting to come back to the city. They're showing interest, especially at that really high end. You know, we here in Chicago, the prices are a little bit lower for our high end. We say 4 million and up, but the buyers are coming back, but they're coming back at a discount.
All right. I mean, we're talking about some mega discounts. Is this just a case of price correct, meaning they were just so inflated to begin with that was wrong and this makes more sense, or it's something that's really going on in terms of Chicago and some of the wealthy, super wealthy, uber wealthy kind of saying bye-bye?
Well, that's a really good question. I think the answer is both and. And what I mean by that is that, especially if you think about the Michael Jordan house, I don't know if you've ever seen photos of that. There's some photos in the story, but it's
unique.
It's unique.
You don't have your number, meaning you're
on the gate.
I know, right? We don't have our jersey number on the gate. Exactly.
I don't have a jersey number.
It was incredibly custom to Jordan himself, and so I think there was always a sense that there was going to be hard to find a buyer that wasn't a super fan of Jordan or willing to completely scrap the property. And it's not yet clear what's going to happen to that one or what the closing price is going to be. But if you look at that mansion we touched on in Lincoln Park, you know, that was another example of very elaborate, very custom. It would have been hard to find a buyer at the price that they were expecting. I don't think that buyer would have ever come. But I think with Ken's properties, you know, what we're really seeing is that there aren't a lot of buyers. It's a very small buyer pool for those very elite properties at the top of the market, even if they are not over custom, even if they're just, you know, very like standard, but obviously luxury.
I will say the house that was in Home Alone,
I love that
many
house.
decades ago. It's out in Winnetka, Illinois, so one of the Chicago suburbs, a very pricey one. That hit the market earlier this year for $5.25 million. According to Zillow, Carol, the sale is pending. So we don't know how much it went for, but the Chicago, or the Winnetka home of the McAllister family.
Yeah, I love that.
Back on the market.
It makes you all want to go, what, right? What's
Yeah,
that
exactly.
Kevin
Macaulay.
did. Yeah. All right. Having said that, the other thing I think about is the corporate presence that has been slowly moving out of the Chicago area, you know, whether it's Boeing, whether it's, you know, Griffin taking Citadel out of there. That's a big deal. These are people, you've got a lot of senior executives who will tap into this, you know, expensive real estate market. That's got to be at play too.
You know, I think so. And I think it's also perhaps maybe even a little bit at play in the small amounts of recovery we're seeing. Mm-hmm. You know, I get the sense that, and the thing that I hear very often from brokers that especially specialize in the downtown condo market is like, you know, the suburbs have been fine for the most part. You know, sometimes there's something that's a little bit, you know, out of the ordinary or it's not selling as fast, but overall people have been flocking to the suburbs specifically since the pandemic. But as we're seeing these, you know, luxury condos start to close again, it kind of asks the question essentially, are workers coming back and are CEOs coming back? And so, you know, we haven't quite yet see that play out, but I do think that that's some sort of a factor in this.